Alright guys, it is Thursday. Hope you're having a good day and a good week. I know we usually do the Thursday sessions live here, but I got a few things to handle at home tonight, so I'm banging out the video real quick. And in the next 15-20 minutes, should get it posted here for you good people. But they are squeezing the shorts, guys. They are squeezing the shorts. And I think that's all this is for now, is a short squeeze. A bear market bounce, one might say. And then tomorrow you got quad witch expiration. So if there's ever room for shenanigans either which way, could be into tomorrow. But in terms of structure here, based on the weekly charts, the path of least resistance probably continues to be to the downside. However, you've got some room to the upside here if we can hold that 21 EMA. So I think we're heading right back down towards the lows if we break back under, call it 4,300. But if we can actually stabilize, and we're doing a pretty good job here, if we can hold above the 21, I think you got room up to about 4,450, 4,500, right towards your daily 200 SMA. That would take you into the weekly moving average. If you got a rejection there, and then things start to roll over, I think it sets up a really good short. But for the next few days into next week here, above the 21, I think you got some upside. So this is really important because say you're looking at something, say you're looking for a few shorts. Uber looks like a good short. Snapchat looks like a good short. As does Comcast, as does Intel. These are all going to continue to rally if the S&Ps rally. And they're all going to roll over if the S&Ps roll over. So before you go short Uber tomorrow, make sure you're watching those indexes pretty closely. Gotta hold that 21. And then in terms of getting bullish here, so say today you're you're locking and loading on some Microsoft calls. The trade probably works for a little bit, at least, if the S&Ps and the Qs can hold up. But it's going to go right back down if they go right back down. So that's where we're at right now. The levels on Amazon, the levels on Apple, Google, they don't too much matter right now. I think the levels that matter are the levels here on your indexes. And the big one there is the 21 EMA. So that's how I'm seeing things right now. For me, the bigger picture has not changed. I still want to short bounces, and as a matter of fact, this might be the bounce to short. But if we're back under the mean, I think we're rolling right back over. So for tomorrow's close, that is, I think, a pretty big line in the sand. One thing I did want to show you here tonight, though, we can't confuse these, these short squeezes. We can't confuse these, what are for now bear market bounces with bullish opportunity and bullish trend. So the semiconductors, they bottom out down there at like 240, 240, and they rally up to what? 263. So that's 10% off the bottom. It's still not bullish. There's no buy signals. There's negatively stacked EMAs. There's red 10x bars. So for those of us that have gone to the Church of Carter, it's not bullish. You're under your weekly 21. So don't confuse today and yesterday's rip with, all of a sudden the semiconductors look like the perfect buy. Now, they're going to move with the indexes. So if the S&P rallies to the 200, maybe the semis could as well. But this isn't the kind of structure where I think you want to come in and you're buying semi calls for 30, 60 days out and you're just going to sit on it. You don't really want to do that with this kind of structure. Where I think you could still get away with doing that is energy. So just play the game of comparison real quick. Just focusing on like a lot of the tools that we focus on. So for the semiconductors, there's negatively stacked EMAs and red 10x bars under the weekly 21. For healthcare, that's a nice move off the bottom. We can't chase this just yet. There's no stacked EMAs, so good move here. We can't get to work with that just yet. The financials, how about the financials? The frisky financials, again, good move. This is still shit. There's negatively stacked EMAs. If you want good looking trend and structure, it's still here in energy. XLE looks really good, and in crude oil, back above that 21 after testing the 50. That's got some good structure. You look at XOP, another way to look at this whole group move. That looks awesome. So right now in the mastery, we got some long positions on Devon, and I think we might pick up a little bit more. But you have trend, you got structure, you got buy signals. It's all good looking, sexy stuff right there. Another beauty that we have in the options room is EOG. And I always got to be careful to say this like in these videos because it's traded. So we know anything could happen. But man, in terms of structure, I mean, this is close to perfect. So your Devons, your EOGs, your Chevrons, that's where you buy the dip. I think you could also look to buy the dip in gold. So look at the gold futures here. Notice how we have trend, structure, momentum. So maybe gold rolls over, maybe energy oil rolls over, and maybe the semiconductors rally into a brand new all-time high from here. But in terms of taking trades based on probabilities of structure, good looking bounce here for the semis, but it's not bullish. It's tough to make that argument, hey, this is like really, really freaking bullish under the daily 200, under the weekly moving averages, with all that negativity up there. And if this closes tomorrow like a few dollars lower, you got a sell signal. That's a totally different world than energy. You get long energy. I'm not saying it works, but you're getting long with trend in your favor. You got positively stacked DMAs on the daily and the weekly, so you're getting long with structure in your favor. And you got positive histograms and green 10x bars, so you're getting long with momentum in your favor as well. For now, we can't say the same thing about buying Microsoft, buying Google, buying big tech. They might shape up here next week, the next few weeks, and they might start to print much better looking charts. But for now, the present moment, I think your best looking trend is still energy. So we got some long EOG, we got some long Devon, and I got to price out a few trades here tonight, looking for a few more. And we might just add to EOG and Devon, because they're looking pretty sharp here. But you got the buy signals, so that means you got some good looking stuff there. So long EOG, long Devon, long energy, and then we're taking this market day by day. Sam Shames from the options room, I know most of you are familiar with him. He's been saying something over the last week or so, and I might misquote him, but basically something along the lines of, you have to hold two ideas in your head at one time. So I still think this market's a short. To me, nothing has changed meaningful. I think we're going to be making new lows into April and May. And I'll be the first to change the opinion when the weekly structure changes. But for now, even though in the bigger picture sense I want to get short and I'm bearish, if you take back that daily 21, a lot of folks are still trapped short. You've got some room to the upside. I think you got some room here. At the same token, though, we're still in a weekly downtrend. We still have negatively stacked DMAs. You slip back under that 21, it could be lights out. So dial into the 21 EMA, bullish or bearish. I think it'll give you a good sense of what the next 4 or 5 days are going to look like. One interesting observation is the fear trade right now. So basically the end of the world, World War III trade is long oil. So long energy oil, long gold, long palladium, and long volatility. So VIX, palladium, gold, energy oil, that's the fear trade. Right? So that's the trade that works, or the thinking is that's the trade that works if the indexes continue to roll over. Right? And there's more turbulence in the economy and in the world. That's the fear trade. The opposite of the fear trade is, you're buying QQQ, you're buying the S&Ps. So what's really interesting about today, not just today, but the last few days, if you look at the fear stuff, it all kind of reverts back to its 50 SMA. So VIX is back down to the 50. Before it caught a bid here, and boy did it catch a bid, crude oil came down to the 50. Before it caught a bid, palladium came down to the 50. And then I would say gold here. Gold got pretty damn close. Couple bucks shy of the 50. So it's just interesting. The fear trade reverts back down to its mean, while the index, the opposite of the fear trade, kind of puts in a rally back to its 50. So all the fear stuff coming down to the 50. And the index is the opposite, rallying back to the 50. What's most interesting about that, though, is the indexes are up pretty good today, but so is the fear stuff. So what you would, again, based on that narrative, what you would expect is S&P's up 1%, Q's up 1%, small caps up 1%, gold down, oil down, palladium down. Not quite the instance here today. You got a good pop in your indexes, but we can already see they're starting to pick up a little bit of that oil, up 10% today. They're picking up a little bit of that gold, up 2% today. A little bit of that there palladium, which I think is used to make chips, up 6%. So I just show you this to say, keep an eye on that. They continue to buy palladium, they continue to buy crude, they continue to buy energy, they continue to buy gold, and then you start to get a pop in VIX. For the time being, just tells us that folks are still getting positioned for that, end of the world trade. And that's probably a bit extreme, but they're getting positioned for that fear trade. They're going to get some fear if you break the 21 EMA. So all things to watch here, guys. All things to watch. You really dial into the bigger picture, which for me is the weekly chart. And here's the irony. When we're playing that bullish weekly trend, in hindsight, it's like, man, I wish I bought every dip to the weekly 21. Because that's going to serve you really well as long as that trend is trending. The difficulty in the heat of the battle is when you're getting that pullback at the weekly 21, it's all looking a little sketchy. Daily chart kind of goes to shit. Structure breaks down. In the short term, it's like, this is kind of bearish. Do we really want to buy into this? Well, when you're shorting a potential downtrend, it's very much the same. To get that rip back to the weekly moving average, which typically sets up the good short entry, your 30-minute, your hourly, your daily chart, they got to flip a little bit. So in the short term, things are going to feel a little bit bullish. But the key is whether or not, when and if they test the weekly 21, do they roll back over? That's where you short it. If and when we get there, if we can't hold the 21, right back down and we go. So that is my thinking, good folks. We got some energy positions. So we are long EOG. We are long Devon. We still got a short here on Intel. And like I mentioned earlier, it comes down to the market. So if the S&Ps rally into the 200, you probably got some more upside here. This probably won't continue the downtrend unless the S&Ps do. So we're holding on tight to Intel. And then we got the IWM short. And this expires next week, which is kind of my only complaint. So we're shorting this back here. And you had like a 45-second, 60-second window to take profits on that huge gap. Outside of that huge gap, it's just been range bound here. Very much caught up in a daily squeeze. So that expires next Friday. Down at -1, so 195-ish. We would have a pretty nice profit on our hands. If you were to make that 2-8AR move to the downside between now and next Friday. Bigger picture thinking, though, I do want to short it up around 210. So if it rolls over from here, we'll take the profits next week. But if we do get a bit more upside, 210-ish, that's a level to short it. So patiently waiting for that, but that does expire next Friday. So if we can lose a 21 and head down to -1, it's going to be pretty nice profits. Nothing huge, but better than a stick in the eye. In the event it all fell apart here, it'd be a total grand slam. But we're hanging tight for that, hanging on tight to that for now. And we got some Intel, long Devon, long EOG, and waiting to see whether or not these indexes hold above the mean. Hold above the mean, I think you're looking for 4450, 4500. Up there, I'm going to look for a rejection, a turn back down, and I would short it. If we just end up fading again, I think we roll right back over. So if we could hold, call it 4300. I think the bulls got a runway here up to about maybe 45, 4450, 45. But if the bulls can't keep the mean, you got to keep the bean. If they can't keep the mean, think we're going to puke it up. So all things to watch for there, y'all. I'll keep you posted on the next few trades. All depends on the market. All depends on Big Mama S&P. But one thing is for sure, as long as energy's got that trend, that structure, all that goodness, we are going to look for a few more trades there. So if you got anything on your watch list you think I should take a look at, let me know here in the comments. Otherwise, go on ahead, enjoy the rest of your night, rest up. Quad witch expiration tomorrow. It shall not be dull. Talk to y'all soon.